good morning. Hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the penultimate day of the trading session and we have the US Federal Reserve's 25 bips rate cut, which was widely expected by the market participants. Now, this was not a hawkish cut that the Wall Street was anticipating, but we did see that Chairman Jerome Powell downplayed inflation fears and said that the tariff increase was mostly what was bloating up the inflation, and even indicated that the overshoot in inflation would decrease once the tariff price increases are over. So yes, that's coming in from the Federal Reserve, but going ahead, how the rate cut trajectory would pan out is something we'll understand from our experts shortly. But the dot plot currently indicates that 2026 would see only one rate cut and another one in 2027 before the federal funds rate hits a longer run target of around 3%. But yes, on the back of this, the global markets have been quite buoyant. We did see US markets do a strong session overnight. The Dow Jones climbed over nearly 500 points. Asia Pacific markets also started on a higher note. And the optimism was felt in the commodities front as well. Oil prices rose after the US said that they have seized Venezuelan oil tanker. And from the precious metals, gold prices rose and silver also hit another all-time high. So all in all, the setup looks quite positive. Whether or not the Nifty, for our own markets, Nifty is able to snap its 3-day losing streak today is something that we'll be watching out for. But for now, let's take a quick look at the top headlines this hour and keep posting your stock-related queries. Stocks on Wall Street close higher as Fed cuts rates by 25 basis points for the third time in a row, bringing federal funds rate to 3.5 to 3.75%. The Dow Jones gains almost 500 points, while the S&P 500 retreated above its record closing highs. Asian markets traded higher following positive moves on the Wall Street. The GIFT Nifty, meanwhile, is also indicating a gap-up start after 3 days of selling. Crude oil prices settle higher after US seized an oil tanker off the coast of Venezuela, sparking supply concerns. Gold prices, meanwhile, rise after the Fed rate cut, while silver has hit an all-time high again. The PFRDA has issued new investment guidelines for government sector pension schemes, allowing investments in gold and silver ETFs. The new framework also sees investments in constituent stocks on the Nifty 250 and BSE 250. Indigo has submitted a revised flight schedule to the DGCA as directed by the regulator. The airline has cut its guidance for Q3 following the recent disruptions. CEO Peter Elbers will be appearing before the DGCA panel today at 3 p.m. All right, if you look at the pre-opened rates, we are suggesting, it could be a lower start for the markets. But right now, you can see Sensex down by about 6 points. Nifty is also, however, up by about 30 points. But yes, to understand, how the global markets shape up and what the impact is going to be after the Federal Reserve has cut the, rates by 25 basis points and what the rate cut path also looks like. Let me get on board with our, special guest, that is your independent EM commentator, Geoffrey Dennis, joining us. Geoffrey, good morning. So good to have you with us. What's your take? I mean, we have the 25 basis point rate cut, a third rate cut of this year. And how does the outlook look like, given that we will be seeing Powell's successor next year?
I think the outlook for next year is very uncertain, of course, in terms of monetary policy for so many reasons. But I'm a little surprised how much the market celebrated this today. I think possibly it was simply that they got the rate cut they expected, and they got a reasonably upbeat assessment by Chair Powell of the economy going forward. And you mentioned, obviously, the commentary Chair Powell gave us on the short-term impact of tariffs on inflation. And plus, of course, they started a bit of QE again by deciding to go into the Treasury bill market and buy some assets up. So I think there was some good news out of this, but I don't think much of this was a surprise. And at the same time, we've only got one rate cut according to the Fed in 2026. So a bit surprised by the reaction, but certainly Powell is presenting here a bit of a Goldilocks economy, and that certainly allows the equity bulls, and I've been part of that equity bullish story for a while, allows the equity bulls, I think, to continue to run for a while.
Okay. But Geoffrey, from a geopolitical risk point of view, what do you make of the recent seize of the Venezuelan tanker by the US? Trump even said that the president's days are quite numbered as of now.
I mean, obviously, tensions are rising almost every day between the US and Venezuela in a quite extraordinary way. And clearly, President Trump wants Maduro out, and there's no doubt about that. Now, bear in mind, in terms of market impact here, it is not going to be that great because Venezuela does not produce as much oil as it should do. Venezuela's got vast oil reserves, but because the whole thing has been so mismanaged, the economy and the oil sector for so many years, that if you suddenly found that Venezuela oil came off the global markets, it would obviously have an impact at the margin in pushing prices up, but it's not going to have a major impact. But having said all of that, the geopolitical focus on Venezuela will continue. And while that is going on, that'll put a little bit of support under the oil price. I believe, and I've said this for a long time, I think oil prices are in a trading range here. Brent between perhaps 58, 59 dollars per barrel and 65, 66. I don't see a big move outside that range, and I don't see an attempt by an outright attempt by the US government to oust Maduro is really pulling the oil price out of that range.
Okay, okay. But for our own markets, Geoffrey, I mean, rupee depreciation has added to the worries. Do you think that the lack of the US-India trade deal is a key overhang here?
Yes, it is. I think it's definitely an overhang.
Hmm.
There's been so much going on in India recently, as you of course all know, particularly on the macro front with the rate cuts, with also some extraordinarily good GDP numbers and with an upgraded forecast for fiscal 2026. And I think all of that is good. What's hampering, I think, the market still is China is still very much in favor of for global investors, and I think that's pulling money out of India. And as you say, we're still trying to organize a trade deal between India and the US. And of course, Trump talks tough, and there are certain sectors in India that the government doesn't want to open up, and I get that. So it's not going to be easy to get that trade deal. Now, what is also very interesting is there was a great piece in the Financial Times in London about a couple of weeks ago saying that India had underperformed emerging markets this year by the biggest margin since 1993, which is astonishing. And I think that underperformance is so dramatic now that what it's done is to narrow this valuation premium that Indian stocks have got vis-a-vis the global index. India's fallen right out of favor with foreign investors. It has not taken part or almost at all with this big rally up 27, 28% in dollars for EM this year. And I think it's getting a bit overdone. And we're at the point now, I think, where the gap between performance is so dramatic. The valuation gap is narrowed sharply. You've got potential for more interest rate cuts, in my view, even though inflation, which is so low, will eventually rebound. And I think it's probably a good time to start thinking about buying India again. Although I've been saying this for a while and I've not been right, but India's underperformance continues and gets worse, and therefore eventually China's going to fall out of favor and people are going to come back to India. And I think we should expect that at some point over the next 3 to 6 months.
Okay, okay. But, we recently had the conclusion of the September quarter earnings. I mean, do you believe that the scenario has changed for India after the quarterly earnings? And how are you placed on the valuations like you were talking about earlier?
Well, I think as ever, GDP growth does not equal EPS growth. And I know there's been a lot of disappointments, but we're looking at a market here that has underperformed China by 25, 2,600 basis points this year, underperformed EM by that amount, underperformed China by even more. And I don't think you can explain all of that in terms of earnings growth being at times disappointing. And so at the end of the day, I think you've got to assume that the valuation gap, which I think does, the reason India has traded so long at a high valuation is because of the growth potential. If that valuation premium narrows in sufficiently and the growth potential is still there, eventually investors will come back. And the underperformance has been so dramatic this year that I think short of earnings collapsing from here, which doesn't look very likely, I think eventually the FIIs will come back.
Okay. But Geoffrey, we had the Oracle's numbers and the street is a bit skeptical of their higher AI capex compared to the first quarter. How do you see the AI trade to pan out for the next couple of months? And does the anti-AI trade put India in a favorable position going ahead?
I don't think I'm not sure how big an anti-AI trade there really is. Obviously, there's
Hmm.
worries over the amount of investment that these companies are going to have to do. There's also concerns over what is starting to look like a bit of a cross-holding issue of stocks and ownership across some of these companies. And of course, they're very dominant in the S&P index, something like 40% for index weight for the Mag 7. And there've been a number of very well connected and very well respected commentators talking about this might be the time now to start moving some money out of Mag 7 and the tech sector generally in AI towards some of the stocks that have been underperforming. I think that's probably a pretty good move. I'm gonna sort of give you a mixed answer here, really. I think the AI trade and the tech trade has got plenty further to run, but whether it's going to dominate the market the way it's done so far this year, I think is unlikely. I think there will be some rotation into more classic sort of growth stocks like consumer, for example, some of the industrials. And I don't think that's going to have a big impact in terms of Indian performance. I think what's going to matter for India is going to be when does China start to flatten off and start to pull back? Where is the dollar going to weaken further, which will help EM overall and will certainly help to stabilize the rupee? And how strong is the growth outlook really, in truth, going to be? Those are the things I think that will help India to recover. It's not really going to be, I think, driven by how strong is the AI move from here. I don't see this as a bubble in AI in the US. There's lots of good reasons why this is very different from the tech bubble of 1999 and 2000. But I do think it might make sense in the US to start rotating into some of those underperforming names that have lagged behind this remarkable performance by AI and tech stocks generally.
Okay. So China's movement and of course the rupee stabilization key for the markets to have some stabilization going ahead. All right, on that note, we have to let you go, Geoffrey, but thank you so much for joining us this morning and I hope that we connect with you soon.
Yes, thank you.
Thank you. All right, let's take a quick check of how the pre-open rates are panning out this morning. If you look at Sensex, it's up by about 65 points. Nifty is also up by about 13 points, so to say. But yes, just a couple of minutes, we'll get to the open. But on that note, let's quickly get on board with the technical expert of the show. Joining me is Chandan Taparia of Motilal Oswal. Chandan, I mean, yesterday we did see, the Nifty extending losses to the third consecutive day. So on the levels front, what can we watch out next?
Good morning. Thanks for having me, and it's great to hear the global perspective of the equity market. But to comment on the Indian equity market, we are witnessing some profit booking from last couple of days. The key reason behind that rupee is continuously weakening, moving beyond 90 marks. Other assets class are doing well, and sustained supply is clearly visible. However, the good part is that Nifty is still challenging or respecting its 50-day exponential moving average, but sustained supply at higher levels or selling from the FI is not allowing market to hold at higher levels. So I believe till it holds below 26,000, it would be tough to get the one-way move. Index has potential to retest the key support near 25,600 marks.
Okay, all right. That's the view for the Nifty levels. But yes, the first rates are dropping on your screen where both the benchmark indices have opened quite marginally higher but flat with a positive bias as of now. Given the strong run-up that we saw in the global markets after the Federal Reserve delivered a widely expected 25 bips, we have started off fairly on a quieter note. If you look at Nifty, still holding above that 25,700 odd levels. The Sensex also showcasing a gain of about 72 points. Right now, both of the indices have turned once again flat to a negative bias. So it's kind of volatile session which is panning out for the markets once again. Remember that it's Thursday and also the Sensex weekly derivatives expiry. So some volatility could be anticipated as well. If you look at the broader end of the markets, mid-cap and small caps once again sulking in the trade. Mid-cap showcasing flat to a positive, flat to a negative bias. Small caps also showcasing a decline of about 0.1%. On the sectoral front, Nifty IT index has been doing well, 0.5% gains coming in from the IT index. PSU banks have been holding up well in the green, flat to a positive bias. And on the other hand, what is not doing well in this market includes the likes of auto stocks. Pharma index is seeing a little bit of a cool off. Realty stocks also seeing a bit of a setback. But yes, metal stocks once again stealing the limelight today, 0.4% gains coming in from the Nifty metal basket itself. But yes, let's take a quick check of where do we stand on the Nifty 50 gainers and losers list. Tata Steel once again doing well, 1% gains coming in for the counter. Hindalco once again, holding up well, given that we have seen up yesterday also. Both of these stocks were one of the top Nifty gainers. Today they are extending its gains. Other than that, we can see Infosys nearly a percent gain coming in for there. Eicher Motors holding up well. Yesterday, Eicher Motors hit a record high, and today also the stock seems to be holding up quite well in this flat market. TCS, HCL Tech, some of the other gainers on the Nifty 50. On the other hand, if you look at on the losers front, Titan showcasing a little bit of a profit booking, 0.5% cut coming in there. NTPC with about 0.5% decline, Kotak Mahindra Bank, Bajaj Finance, Reliance Industries showcasing a decline of about 0.3%. But yes, broader markets once again sulking in the trade today. Given the past couple of sessions, also mid-cap and small-cap indices have exhibited certain weakness. Chandan, getting to you for the Nifty mid-cap and small-cap index, can we see further fall ahead? Because in the past couple of sessions, we have seen certain weakness emerging in this pocket.
So, I believe there will be pressure in the market at higher levels. However, selective stocks can do well. So, better to be with the selective heavyweights and frontline counter rather than trying to go for buying in the selective mid cap, small cap. And I believe once Nifty moves beyond 26,000, then only the buying interest could emerge in selective mid cap, small cap, which are continuously making lower top, lower bottom. So, one need to be very selective in the mid cap, small cap. I believe some more profit booking round or upside seems to be limited as of now in this sector and segment.
Okay. Upside seems to be limited. What about IT stocks? They seem to be doing well today. All the large cap stocks have been holding up well. Of course, it's the US Federal Reserve's rate cut which has buoyed the Nifty IT index as well. But Chandan, 3 days of straight losses we saw today. Finally, we are seeing a bit of relief for Nifty IT.
So Nifty IT is likely to move like this only. We have seen a decent recovery in last 4 weeks, but in this week it's down by around 1.8%. Selective IT counter, which really gave the breakout, again got stuck at higher band. And Coforge fell down sharply in last 3 trading session. So comparatively, Wipro is one of the strongest counter, which is holding the gains. So I believe if someone has to go for buying interest in the IT, Wipro could be the preferred pick. As of now, with support of 254, it can head towards 272 kind of level. And I think in other IT counter, we have to look for some consolidative move or some support based buying before starting the next leg of rally. So one has to be with Wipro as of now to get the relative outperformance in the alpha generation in the entire sector.
Okay, all right. Wipro is one stock we need to watch out for. But yes, let's address one of the top Nifty gainer today. That is your Tata Steel. The stock is showcasing a gain of about 1%. And the company also announced the next phase of the growth for its business in India. This includes the capacity expansion plans they have at Nilachal Ispat Nigam. They are planning to set up rolling facilities at this plant in Mira Mandali, and they're also buying a 50% stake in Triveni Pellets, and an MOU has been signed with Lloyd Metals and Energy itself. Chandan, after a good run up this year, however, the stock has cooled off in the past 1 month. But yes, past 2 days, we're seeing good buying interest, which is once again emerged in the counter.
So it has seen some recovery from lower levels, but momentum is missing. Sustained call writing might not allow counter to hold beyond a certain level. So as of now, 170 is a key level where we are witnessing some writing. So I believe the range bound bias between 160 to 170 could be seen. So if someone has to take the support based buying, can use the support of 160, but again upside seems to be kept till 170 marks.
Okay, all right. Let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Naveen. He's asking the view for Bajaj Finance for a positional trading. Of course, the stock is seeing a little bit of a range-bound movement, Chandan, but what's your view for Bajaj Finance going ahead?
So it has been moving in a range where declines are being bought, but follow-up is totally missing. In fact, in last 4 days, it has seen a corrective move from 1,060 to 1,005 marks. So I think now 980 could act as a support. So one can play the range between 980 to 1,050 kind of level. So can buy near support with the view that positive to range bound bias could be seen after the corrective move of last 4 days.
Okay, all right. Positive to range bound movement can be seen for the particular counter. Let's take another viewer query. We have Naveen who's been asking the view on Muthoot Finance as well, on how this particular stock looks like for the near term. Of course, in the past 1 month, we have seen that the stock has run up quite significantly, 10% gains. And so far this year also, the stock has been quite spectacular. If you look at the market cap, it has crossed by about 1.5 lakh crores, and the stock has nearly doubled in the past 8 months itself. So yes, good cues for Muthoot Finance, but can it sustain its gain, Chandan? What's your view?
Yeah, so we are quite positive on gold and silver, and Muthoot Finance is a gold finance company, so which can continue to outperform. However, in this year, stock has rallied well by more than 75%, but from last almost 18 days, it has been consolidating with higher base. So I believe any day the breakout could be seen in the stock. In fact, in the financial counter, this is one of the strongest name which is having relative strength and momentum both. And we have quite positive view on the silver and gold both. In fact, in last 2-3 days, I recorded some content on my social media, Instagram, about how silver can head towards 2,35,000 and all. So you can watch that. So quite positive on the entire precious metal, including gold and silver, and that's why positive on the counter like Hindustan Zinc, Hindustan Copper, Vedanta, and Muthoot from the gold. So I think one need to focus on diversifying the asset class, be in the gold and silver, and same time you can also focus on Muthoot Finance and counter like Hindustan Zinc, Hindustan Copper as well.
Okay. Quite interesting that you mentioned about your silver prices and of course your note as well. But yes, let's move on and talk about another viewer query. We have Shweta Naidu who's been asking the view on Glenmark Pharma because she's been holding at the current market price, and she's asking whether it's a good stock to hold or shift to another. Chandan, what's your view for Glenmark Pharma? Of course, the stock has seen good buying traction in the past 1 month itself, 10% gains that came in for the counter. What's your view?
So positive to range bound bias is clearly visible in this name. We have noticed support based buying near 1895, 1900. Hurdles are visible near 2000. So I believe 1900 to 2000 could be the probable range. And now the supports are shifting higher. So in fact, one can look at support near 1925 to play the swing towards 2000 marks.
Okay, all right. Positive to range bound bias looking like for Glenmark Pharma. We have another viewer query that is on Apollo Hospitals. That's what Shweta has been asking. She's saying that she's been holding Apollo Hospitals and Jio Financial at about 5% loss each, and she's asking whether or not they're good to add more or to shift at the current market price. Apollo Hospitals today, the stock is exhibiting flat to a positive bias, 0.2% gains coming in. But if you look at the past 1 month, the stock has been exhibiting a negative trend, so to say. But yes, Apollo Hospitals, Jio Financial, she's been holding at about 5% loss. Chandan, what's your view?
So Apollo Hospital has been making lower top, lower bottom formation from last 8 weeks, corrected sharply from 8100 to now near 7000 marks. So structure is weak. However, 7000 could provide some support based buying, but I don't suggest to average it now. Let it see further corrective move towards 6750 to 6800, and I think those level could provide the again bargain buying at lower levels. But one need to keep in mind that in this market where few sectors and stocks which are making lower top, lower bottom, better to avoid those names. So if you are holding, you can hold because bounce can be seen anytime, but don't average it now. Keep the major support of 6700 to 6750 in mind. Talking about Jio Finance, stock has seen a breakdown on last trading session. However, we believe that major support could be placed near 275, 280. So if someone is interested to go for average out, use those support to again aid the position. But again, upside seems to be kept. 300, 305 is major hurdle, which might not allow the counter to move on immediate basis.
Okay, all right. That's the view for both of these counters. Then let's move on with another viewer query. We have Shikha Kapoor who's been asking the view on Vedanta for a short-term target. Like we were talking about earlier as well, Chandan, that you're quite positive on the entire metal space on the back of the silver price rally. But for Vedanta, any particular target levels that you want to specify here?
Yeah, so Vedanta is holding well above its rising support trend line along with 50-day exponential moving average. We have seen recovery from 500 to 530 kind of level. Supports are shifting higher. So I believe this counter can do well with support of 517. I believe this time it can head towards 543, 550 marks.
Okay, all right. That's the view for Vedanta. Quite a bullish statement coming in for the entire metal basket itself. But yes, let's move on and talk about another viewer query. We have Amit who's been asking the view on NSDL and CSDL and which one is a better bet for a short-term medium target of up to 6 months. What's your take on both of these counters, Chandan?
So if someone is talking about capital market theme for next 3 months or 6 months, we are quite positive. And more positive on the exchange related counter, including MCX, BSC and all. But his depository also likely to do well. And I think CDSL is good bargain buy near 1450 levels with the view that it can head towards 1700 to 1850 kind of levels.
Okay, all right. That's the view for the capital market theme as well. Quite positive from a 3 months horizon as of now. All right, let's take another viewer query. We have Amardeep who's been asking the view on Ashok Leyland on how this particular counter looks like. Of course, we've seen in the past 1 month also the stock has exhibited good run up, and so far this year itself the stock has seen a good chart in terms of technical perspective. But yes, Chandan, what's your view for Ashok Leyland, and of course how does the near term look like? Can it sustain its gain?
Yeah, so major trend of the counter is positive, rallied well by more than 43% YTD basis in this year. It has been consolidating in a range from last almost 10 days with higher base at 155. So I believe buy on decline can be applied with support near 152. And I think in this momentum, it can head towards 164, 168 levels.
164 to 168 levels for Ashok Leyland. That's quite a positive statement. Let's take another viewer query. We have Amardeep who's been also asking the view on L&T Finance on how this particular counter looks like. L&T Finance, any thoughts on this particular counter, Chandan? I mean, the stock, once again, it's one of the top outperformers for this year.
Yeah, so quite positive setup. In fact, rallied by more than 125% in this year, 2025. Major trend is intact. Every meaningful decline is being bought, and I believe till it holds above 294, it has potential to rally towards 315, 320. However, it has been consolidating, but I believe major trend is intact to positive, and this buying interest could take the counter to us next league of new all-time high.
Okay, next league of new all-time high for L&T Finance could be possible then. All right, let's take another viewer query. We have Shiva Kumar who's been asking the view on EU Small Finance Bank on how this particular counter looks like. Of course, yesterday we did see that the stock hit a fresh 52-week high on the government's approval to increase the FII limit itself in the particular counter. And today, however, the stock is seeing a bit of a pullback, nearly a % cut coming in for EU Small Finance Bank. But Chandan, what's your view for this particular counter? Any levels that you're watching out for?
Yeah, so quite positive in this name, and really in this year it outperformed significant manner. Multiple supports are visible near 945. Last trading session it made a high near 1000 marks. Today it witnessed some corrective move but has been consolidating, and we believe buy on decline could continue. So till it holds about 960, again look for 1007 to 1025 marks on the higher side.
Okay, all right. 1000 mark could be possible for EU Small Finance Bank. Speaking of another lender, we have another viewer query, that is Komal Makhija, who's been asking the view on what is the fresh entry level for SBI for the long term. SBI, how does the stock look like? I mean, today we have seen that, the stock is once again quite resilient, 0.5% gain coming in.
Yeah, thank you, Komal, for asking the question on an interesting name, and we are quite positive on SBI. In fact, it was our Diwali technical pick and really rallied well by more than 12 to 15%, headed towards 999 marks. As of now, I think any level in between 940 to 950, you can go for entry for an upside target towards 1020 to 1050.
Okay, all right. That's the view for SBI as well. Let's take another, viewer query. We have Janvi who's been asking the view on Indigo and how this particular stock looks like. Of course, we did see that the stock, yesterday also the stock saw a little bit of sell-off. Today also the stock seems to be not doing well, given that the airline regulator has also guided for a turbulent, say, third quarter itself, and they've cut their growth guidance for the third quarter. But yes, coming to you, Chandan, for Indigo, what's your view? And of course, how does the technical chart look like for this particular counter?
So, Janvi, I never believe in catching the falling knife, and stock has been making lower top, lower bottom. If I look at the price behavior of last 10 days, it has seen a corrective move from 59, 52 all the way to 46, 45. So when we know that there is some concern, better to wait and watch, because this market is not in hurry to get the momentum. There are so many counters which are providing the strength and the stability. So better to be with those names. But if someone is looking for long term, I believe let it get some stability to initiate the position. But for trading point of view, better to avoid because some volatility is clearly visible in the name. If you ask me the technical setup, I believe 4500 is major support. And if it moves above 5000, then we will see an early sign of bottom out approach in the counter.
Okay, all right. 4,500, that's the major support that's coming in for Interglobe Aviation. That's something that we do watch out for. But yes, let's talk about another stock in focus. That is your Mazagon Dock. The stock has been seeing steady gains today, given that the company has signed an MOU with the Indian Navy and the Brazilian Navy at Brasilia in Brazil to strengthen the cooperation in the maintenance of its Scorpion-class submarines itself. But yes, the stock has been down 10% over the past 1 month itself. Today, however, the stock is seeing a good pullback, 1% gains coming in. Chandan, what's your view for Mazagon Dock?
So like defense counter are comparatively more volatile. However, selective counter were witnessing buying interest, but we have seen a breakdown in most of these names. So it would be tough to catch the momentum. However, these counter are trying to find some bottom out approach, but weekly and the monthly chart structure is now got disturbed. So we require a decisive hold about 25.10 to get a confirmation for the bullish stance. Otherwise, wait and watch. As of now, those who are holding the position keep the support near 2400, upside hurdle at 25.10. About 25.10, I believe short-term bottom will be there in the name.
Okay, all right. That's the view for Mazagon Dock. We have another viewer query, that is Shweta Naidu has been asking the view on JBM Auto because her buying price has been at about 697 rupees and she's asking whether or not we should book losses or average at the current price point. What would you suggest, Chandan? I mean, the stock has been quite range bound in the lower circuit, and right now the stock is seeing, trading at about 500 odd levels. So, what's your view on the counter?
So counter has been making lower top, lower bottom on the daily and the weekly chart. Even broken the major support of 585. Structure has turned lower. So I think wait and watch. However, EV is a good theme for long term, but on short term the counter is not performing. So I believe if the counter has to move beyond 600, then only the stability will be back. So wait and watch. If moves above 600, then only look for some bottom out approach. Otherwise, let it stable or let it find more profit booking to get some stability or bargain buying at lower levels.
Okay, all right. That's the view for JBM Auto. We have another viewer query by Geetu Sandesh who's been asking the view on JSW Steel or JSW Energy and which one is a good buy at this price point. Of course, both of these counters have seen a correction in the past 1 month, over 10% decline coming in for both of these counters. Do you think that any of these counters look attractive at the current levels, Chandan?
So we have, thank you, Gituji. So I think metal counter could be in focus, but again, due to the market pressure, momentum is missing in these names. We have more positive view on the silver, copper related counter like Hindustan Zinc, Hindustan Copper, Vedanta and all. Talking about JSW Steel, it has seen a corrective move in last 5-6 weeks, corrected from 1220 to below 1100 level. So let it find some stability near 1070. So I think 1070 could provide some support for a bounce towards 1130, 1140.
Okay, all right, 1070 for JSW Steel. Let's take another viewer query. We have Satvika who's been asking the view on Satin Credit Care on how this particular counter looks like for the near term. Chandan, what's your view for this counter? I mean, in the past 1 month, the stock has still seen a decline.
So like I think the structure is weak and we have noticed that bounces are being sold. So I think better to go for some more confirmation. I think let some stability happen before we review for again next leg of buying opportunity. So wait and watch kind of a stance has to be applied.
Okay, that's the view for Satin Credit Care SL. Let's take one of the top Nifty losers today. That is your Asian Paints. It's showcasing a decline of about 1% itself. And however, the stock has seen a good rally in the past 1 month and seen a good breakout also from the levels of in the past 1 month itself. But yes, it's seeing a bit of a pullback. Chandan, what's your view on Asian Paints? How does the near-term trajectory look like?
So it is given a breakdown on the daily and the weekly chart. Earlier, counter was holding well, but the way it has broken 2850, again it seems that movement will be tough. So 2850 is the hurdle. Above that, only buying interest could emerge. Otherwise, as of now, there is the potential to retest the 50-day mark near 2720, 2700.
Okay, all right. That's the view coming in for Asian Paints. Let's take another viewer query. We have Samir, who's been asking the view on Concord Control Systems because he has purchased the stock at an average price of about 780 rupees, and he's asking the view for a long-term horizon. Concord, today's this stock is seeing a decline of about 4%, and if you look at the past 1 month charts, however, the stock has seen a decent run-up. Chandan, what's your view for this particular counter?
So Concord has been finding some pressure from last couple of weeks. Structure is weak. However, recently it made the bottom near 493, but follow-up is not visible. So if it moves above 515, then only the stability. Otherwise, we have to keep the counter on the sideline because most of the railway counters are witnessing selling pressure, and this counter is trading at multiple months low. So better to avoid or wait and watch more in the counter.
Okay, better to avoid at this point of time. Let's take one stock in focus. The stock has been doing well, holding up marginally in the green. The company's, that is your Puravankara, the company's wholly owned subsidiary has received an order which was worth about 500 crore rupees for its project in Bangalore itself. Yesterday also the stock did see a decent jump of about 2%. Today also the stock has been holding good gains, a percent gains coming in for there as well. Chandan, what's your view for Puravankara?
So counter has seen bottom out approach, but momentum is missing because real estate counter are not performing accordingly. That 255 is an immediate hurdle. So we need to play the range between 240 to 255 with limited upside and some support based buy.
Okay, all right. That's the view for Puravankara. Let's take another stock in focus, that is your Cipla, given that it has launched a prescription medicine which is used to treatment of obesity and type 2 diabetes as well in India. Chandan, the stock has been fairly range bound this year. Today the stock is showcasing a gain of about 0.5%. But from a near-term perspective, what can we watch out?
So I believe this range bound bias could continue. In fact, from last many months, it got stuck in a range. And the good part is counter's resilience, not worried from declines, not happy and excited at the time of any market recovery. So I believe such kind of move could continue. We need to follow the proper range between 1450 to 1540. So this is what we need to play the range with limited upside as well as the downside. And it's good for the people who are doing the option writing on the call and put both the side with the view that counter is not in a hurry to move on either side as of now.
Okay, all right. That's the view for Cipla. All right. We discussed a range of stocks, Chandan, but, let us know what are your top picks at this hour.
Yeah, so like in this market, very selective counters are doing well. So we have to be very selective. We are not in hurry to pick the index as of now with the view that upside seems to be kept. Sustained call writing is visible till it doesn't move beyond 25,850. We are looking for retesting the lower zone. So there are very less counter on the bullish stance, but as I mentioned, that positive on the gold and silver theme. So Hindustan Zinc could be one name where we are looking for an upside move with support of 512, looking for an upside move towards 535, 540 kind of level. So I think we need to be slight defensive or conservative for the stock picking idea. Apart from that, selective capital market theme could be in focus. On decline, we can focus on counter like IIFL, which is forming a positive price pattern. If you want the other name, I believe, focus on selective financial name, whether we talk about L&T Finance and Federal Bank, which might see some consolidative move. But yes, again, to sum up, we need to be very selective. Let the market get some volatility or support at lower levels before going for aggressive stance in the market.
Okay, all right, all right. All right, on that note, we have to let you go, Chandan, but thank you so much for your time. All right, let's take a quick check of the markets before we move on to our next guest of the show. You can see that the benchmark index, both of them have been trading quite flat as of now. Nifty is still holding above that 25,700 mark, but still it's flat with a negative bias, so to say. 47 points downtick coming in for the Nifty 50. Sensex also down by about 95 points, showcasing a decline of about 0.1%. If you look at the broader end of the markets, midcap seems to be doing well today. 0.1% gains coming in there, but still very flat with a positive bias. On the other hand, if you look at the small cap index, with a negative bias of about 0.1%. Once again, Nifty mid cap has slipped into the negative territory. So yes, it's a quite a volatile session, so to say, because if you look at the the overall texture of the markets, that seems to be quite volatile at this point of time. But yes, if you look at the texture of the markets, like I was talking about, the advance decline ratio, definitely declines have taken an upper hand instead of advances. So yes, once again, a weak texture of the markets despite the global markets remaining buoyant earlier. On the other hand, on a sectoral front, Nifty IT index trimmed some of its gains from earlier, however, flat with a positive bias. Nifty metal index holding up gains quite well, 0.5% gains coming in for there. Pharma and PSU banks seems to be also doing well today. On the other hand, if you look at the losing end, realty stocks once again sulking in the trade, FMCG showcasing a decline of about 0.3%. But yes, so with that, let's quickly move on to our next guest of the show. We have Rishi Kohli, CIO of JioBlackRock Asset Management Company, joining us to understand how the market sentiment looks like. Rishi, good morning. How are you viewing the market sentiment? It's now going to be the fourth straight day of losses for the Nifty 50, and even in the last month of this year, we are seeing that the FIs have been selling quite aggressively. So what does it mean for 2026 going ahead?
Sure. Good morning. Happy to be on this show. So for the markets, of course, they've gone into a bit of a range-bound kind of behavior, which is not honestly very surprising given the timing of the year. As you said, FIs have been pulling out, but usually the first half of December, is always like this. So typically there is some seasonality where November, December markets will see a bounce. But in the first or second week of December, or largely the first half of December, you will typically see the markets being dull to negative. But then it sort of picks up post mid-December. So I think from next week onwards, from a seasonality side, I would be slightly positive. That is, of course, from a very, very near-term view. Thinking ahead for 2026, as you asked, I think I'm slightly on the bullish side only. But I think there would still be bouts of volatility till February or so. And then post-March, I think there could be one or two good years for the markets. Obviously, all this view is coming from the earnings expectations. Over the last 4-5 quarters, markets have been dull, but that's because earnings growth has not come in as expected. There have continuously been downgrades and downgrade of expectations of what is going to happen. The previous quarterly results obviously showed some halt in that decline and some minor uptake overall, and overall growth was slightly better than what on average was being expected on the street. There have been more upgrades compared to downgrades. So some of these metrics, which we track closely, even from a quantitative perspective, have minorly turned. It's not like a secular trend still, but based on what we are looking ahead for the December quarter and the March quarter, it looks like that trend should continue upwards. And once you see 1 or 2 quarters of such continuous up moves on the earnings front and related fundamental things, then I think the confidence and sentiment improves drastically. So I would expect that to start happening March onwards overall.
Okay. But the participation from the broader end of the markets has been missing, and that's what is bringing the overall markets under pressure. So how are you reading into the earnings from this section of the markets? Because we're in the back-to-back quarters, we've seen that the small caps have seen quite a bit of a hit.
Yes, so it's an interesting trend. Obviously, in 22, 23, 24, you saw everything performing together, whether it was small, mid, large. And obviously, when markets they fell in 20 and from 21, they started rising in that kind of a patch in the early part of the move. Typically, small caps will tend to do well as well. So we saw all of that. Over the last year, there's already been some dispersion as markets have been dull. And in this initial recovery over the last few months as well, small cap, mid caps have been lagging and it's the large caps leading. Interestingly, that largely coincides with the earnings as well. So that is what is very interesting, that even for this year, yes, I think overall mid caps are showing much better earnings. But for next year, mid caps are looking okay, but large caps are also looking good. And small caps are actually not looking that great, whether you look at it overall from whether FY26 or FY27 numbers. So the price behavior, I think, is mirroring that, and therefore not very surprising. Having said that, I mean, small cap is a large universe. You go small and micro, micro cap as well, much smaller stocks, and that's collectively a large universe. So there will be pockets, I think, which will do well and pockets which will not do well. So I think it's more a stock picking environment rather than saying that overall that market cap will everything will do well in that market cap kind of scenario. So one has to be more choosy. Overall, we look at things like average correlation across stocks in a sector or in an index or a market cap universe. We look at volatility, and the relative volatility across all of these, dispersion across performance, etc. And those kind of metrics are right now very, very diverged, which means that it's actually going to be a stock pickers environment going forward. When everything does well, we all say it's a stock pickers environment, but basically, whatever you do, you'll do well kind of thing. I think over the next year, it is going to be slightly tougher from that aspect. Not everything is going to do very well, but it is actually a stock pickers environment where, the certain stocks and certain pockets will do better than others.
Okay, got it. But Rishi, I mean, from a primary markets, it's been a phenomenal year. If you look at the IPO fundraising, it's at record high levels as of now. So, I mean, but of course, the average returns have fallen in the past 2 years. Do you think this IPO frenzy will cool off from here on?
No, I think largely it should continue because over the last year, while markets have been dull, we've still seen that activity continue, as you correctly said, apart from a few months where markets were sharply down like Jan, Feb earlier this year. I think apart from that, largely the activity has continued. And if I marry that with the outlook, both near term and over the next 1 to 2 years that I was just explaining, there's no reason for that sentiment to sort of cool off, because as markets go into a healthier trend, say by the middle of next year, then obviously there'll be more companies that will want to come to the IPO market. So I think that trend will remain healthy. That has obviously been fueled by a lot of new age companies coming to the market, etc. Right, where still there has been demand despite a lot of talk of profitability not being there or being low or whatever. So that has sort of flowed through. Obviously, that has impacted the markets as well, right? So that has been one reason for the lid on the markets, because a lot of liquidity has been sucked away by a lot of these IPOs. And when markets improve, more activity on this will come, but then the flows would also improve, especially from the FPIs. So then that's how markets would get healthier overall.
Okay, got it. Rishi, what about the IT stocks? I mean, in the past couple of months, we have seen a good comeback, and now that we have the Fed's rate cut, does it make you more optimistic about the IT companies going ahead?
Yes. So in fact, on some forums, over the last 1.5 months, I've been, in fact, saying that it's sort of a contrarian call, but there are signals to be slightly positive on IT. So the way I look at it is that obviously there are some sectors which are in play at any point in time, and there is healthy sector rotation happening is also a sign of, an overall underlying healthy bull market, which has been happening even over the last year. While markets have been dull or have come down, you've still seen healthy sector rotation happening. Some sectors doing well at different points in time. So that is what helps in the overall market being bullish and the view going ahead for me. And within that, of course, the certain models I follow basically look at a couple of sectors which are in play in momentum, and those will continue to do well for the next 1 or 2 quarters. And then you look at one sector which is sort of a contrarian in the near term, but in the medium to long term, it is still looking good. So IT was actually over the last 2-3 months, continuously giving signals in that latter bucket, where in the near term it was the worst sector, but medium to long term it was looking good from both fundamental technical angles. And in the near term, that sort of hit its bottom, hit oversold, was overdone again, both from technical fundamental perspective. And therefore it started coming up as a contrarian buy for me. That has started playing out. Obviously, it's been the strongest performer over the last month. And yes, overall, I'm bullish on it. It is going into a good seasonality also for a lot of the large stocks. So over the next few months, I think seasonality also supports it. Technically, it is looking better. Fundamentally, also the revenue numbers, the margins that have come in for the last quarter have been better than expected. The deal flow has been stronger, than what the market was expecting. The fears on AI related stuff, which was also one of the reasons for the sector not doing well, also in the quarterly results, and later on, whatever commentary has come from the large companies, it looks like that concern on AI was overdone, because in fact, some of the companies are going to gain out of that trend as well. So I think that definitely the worst is over, and I'm bullish in the next 3 to 6 months on the sector.
Okay. But what about, yesterday we did see Oracle announcing certain AI capex plans, which was higher than their previous quarter itself. And that made the street quite skeptical on the back of that, because they have some, negative cash flows, and the revenue also came in lower than what was anticipated. We have TCS also announcing some really good plans of about, AI data centers itself. So does that make you cautious going ahead, given that how majority of the IT companies are pivoting towards building AI infrastructure?
No, not really. That's what I said, that, for some of the Indian companies, that's like a tailwind as well, or an opportunity set as well that is opening up. And some of them will actually gain out of it. And for others, which may not, obviously, again, there will be pockets where, certain stocks may not do as well. But overall, for the sector per se, when we were thinking, oh, AI will take over, and, this services model that India has followed will, not flow through, is clearly coming out not to be correct, because even some of these companies have plans which are related to AI and would benefit from that trend. And for certain services ones, again, which are not necessarily going into that space, even for them, certain AI related services opportunities are coming up very clearly, as seen by announcement of some of the larger companies. So which is why it is not really a very big concern at this point in time. And I think it's scattered, and therefore, as more data and more plans are known, we'll only know for sure. But yeah, in the near term, it was overdone, so the bounce may continue. In the longer term, we'll need to obviously go into more details, and it will become very company-wise specific.
Okay, got it. Rishi, what about the banking space? We have the RBI's rate cut here, and earlier the banking majors were indicating that the margins would bottom out in the second quarter. But now it looks like there could be a hard path ahead. So what's your entire scenario for the banking space? Because we've seen a good run-up in the PSU banking stocks as well in the past couple of months.
Yeah, so I think it'll be a little mixed because of the recent rate cut. But again, there will be pockets. So private banks behaving differently, PSU banks behaving differently, NBFCs obviously different impact completely. So there will be dispersion there, which has already started over the last few months, but I think it'll be more stark going forward. Overall, for the NBFC financial services segment, I think it is overall healthy only. I mean, all these rate cuts and other things don't really impact that too much. And on the margin, it is sort of positive only. And, otherwise earnings and other fundamentals that were coming through over the last few quarters have been very healthy for that. So I think those will continue. PSU bank versus private bank remains a debate. But on the margin, I mean, for certain PSUs, actually the rate cut does not necessarily have a huge impact as well. And obviously their NIMs and revenues and asset quality has actually been increasing, and I don't see a change in that trend. So again, on the margin, yes, some pockets will get slightly hurt in the near term, but in the longer run, I think, largely the PSU banks are in much better shape anyway to, manage this scenario for the near term. So I would still be marginally positive on the PSU banks overall. Private banks is mixed. But overall, the banking sector is looking good because, as I said, the asset quality has improved. Other things have come in slightly better than expected, even in the last quarter after 2-3 years. So on the margin, I'm slightly positive on the banking. It would not rank on as the top sector, but it would still be above average for me right now.
Okay. All right. Rishi, then what's your top sectoral bet at this point of time going ahead?
Yeah, so near-term IT, but if I combine, fundamental, technical, momentum, data signals, quant that we follow, then it is auto at this point in time.
Okay, auto. But do you believe, I mean, we've seen a good run-up in the auto sector as well. Do you think that the major of the future earnings growth is already baked in the stock price, or is there more run-up left?
Yeah, it'll consolidate, which is good. I think it can consolidate for a month or two. But yeah, after that, I think 1 or 2 good years are clearly there for the auto sector.
Okay, okay, all right. All right, on that note, we have to let you go, Rishi, but thank you so much for your time and hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets. Nifty has been sulking in the trade, still holding above that 25,700 odd levels, but seeing a decline of about 0.1%. Sensex has extended the sell-off with about 100 points decline. If you look at the broader end of the markets, mid-caps and small-caps, both of them quite flattish in the trade. On the other hand, from a sectoral point of view, Nifty IT index, which was holding up well, has slipped into the negative territory, 0.2% declines coming in for there. Nifty metal index, however, has been defying the market trend, showcasing a gain of about 0.5%. On the other hand, PSU banks have also been holding up quite well. Nifty Realty has once again popped up in the green. And if you look at Nifty, other sectoral indices, for instance, your Nifty Auto Index also has showcasing a gain of about 0.4%. So yes, we'll be watching out, whether the second half of the session shows a certain bit of recovery from the current levels or not. And also we'll be watching out for the Amphi data, which is due for November. It'll get released by 11 o'clock, and we'll be watching out how the trends have panned out for the month of November itself. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll discuss how the market is developed with our experts and also discuss about the stocks that have grabbed the headline. Until then, signing off, stay tuned to moneycontrol.com.